Hello and welcome. You have tuned into Buy Now, Sell Now and ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts where you get an opportunity to ask your questions live. But before that, let's have a look at what the markets are up to. So Cheryl, the markets are seen to be drifting lower and that's the Bank Nifty which is seen to be under pressure.
Absolutely. A very good morning to you, Shrishti. And looks like we are back to those, subdued moves when it comes to the benchmark indices. We have started the week on a weak footing, now drifting to the day's lowest point when it comes to the benchmark indices. We did see a small bounce back for at least the benchmarks. We did touch the positive territory about half an hour or so ago. But right now, again, we are in the negative territory with the Nifty Bank seeing downtick of as much as 0.5% as we speak. The advanced decline ratio now is tilted towards in the favor of the declines. Talking about the stocks that are gaining, ONGC, a major feat coming in for that particular counter. So that's the reason why ONGC is trading higher by 1.2%. You have Adani Ports, Bajaj Finance, Bharti Airtel, BPCL among the other set of gainers. While on the flip side, you have UPL. That's down about 2.5%. DV's Laboratories down 2.2%. Tata Consumer, HUL, Dr. Reddy's, Britannia, all of them are actually declining in trade today. Let's shift the focus then what the broader markets are doing. Are they holding on to gains? No, today in fact you have the broader markets also that have caved in. You have the Midcap index that is trading lower by about 0.5% as we speak. FMCG, PSU banks are the other set of sectoral indices that are actually declining, with FMCG index being the top sectoral loser. And there are a lot of factors that could be actually contributing to the decline for FMCG sector as a whole, Shrishti.
Well, yes, because a lot of Q3 updates are trickling in. So what are these updates saying? Because this time the decent quarterly updates coming in from Titan with overall revenue growth of 22%, as well as there are other companies too that have come out with their updates. So let's go across to my colleague Winnie, who is here to tell us all those Q3 updates. So Winnie, take it away.
Absolutely. FMCG index is obviously that loser coming in trade today, top sector, because when you look at Marico, GCPL, nothing exciting that has happened coming in from the FMCG pack this time around. As expected, the rural commentary still continues to be quite subdued. What managements, both of Marico as well as GCPL, and previously last week, Dabur also highlighted that rural growth is still lagging. The recovery is not as expected. For Marico, when you look at it, they're expecting a low single-digit decline in terms of the revenue. While in terms of volume growth, yes, a low single-digit volume growth is expected, but overall, the revenue growth is expected to see a decline. So that's what we're keeping an eye out on in terms of Marico as well. Even in terms of Godrej Consumers, when you're comparing that as well, decline in terms of revenue growth. Look at in terms of the volume growth, that's a positive side for both Marico as well as GCPL. But in terms of revenue growth, we're expecting a decline for most of the companies, whether Marico, GCPL or even Adani Wilmar. Demand trends for GCPL, what they're highlighting, continues to be similar to that of Q2. So yes, that's the commentary that has come in from the FMCG pack. But when you look at some of these jewelry retailers, Titan as well as Kalyan, comparing both of them together, Kalyan seems to be seeing a better growth, and that's been the trend in the last couple of quarters. Even now, Kalyan this quarter, Q3 FY24, expected to see a 33% growth according to their update, while Titan is expected to see a 22% growth overall. Now, for Titan specifically, jewelry division is expected to see a 23% growth. This is including international business. Watches expected to see a 21% growth this time. So, for the watches business, seems like the international business has seen a bit of a decline coming in, and that is why watches overall growth is expected to be at 21%. Other than that, when you're looking at it, even for the eyewear business, that's expected to see a decline this time of 3%. So, bit of a subduedness that we are expecting in terms of growth from Titan as well, in line with what the street was expecting, but nothing exciting as such has come in terms of Q3 updates overall from FMCG pack as well as retailers this time.
All right, thank you so much for that, Vinny. Definitely, it's been a very busy weekend for you, definitely, given the fact that you have to keep track of all of these updates coming in from the FMCG pack. But let's hear out what the editor-in-chief, Nikunj Dalmia, actually has to say on the FMCG pack and which direction are they headed.
It's very mixed actually, to be very frank. I mean, whether it is the indication, let's say you got from a Titan, or what we've got from Bajaj Finance, or the indication what we've, let's say, got from Godrej, very, very mixed. I mean, one thing is for sure, the luxury is doing very well, aspiration is doing well, travel is doing very well. But when it comes to the basic necessities, and I think there, that is where I guess the premiumization, the trade up is not happening. I mean, it's like saying most of these categories are so deeply penetrated that now what are FMCG companies betting on? They are saying that, look, you need, see, from that sabun ka batti you moved into liquid soap, and from liquid soap you moved into tablets. I think that is called premiumization. I'm talking about the laundry, market here. I mean, from like the sabun ka batti to wash your clothes, you moved into powder, then you moved into liquid, and now you got tablets which you're using in washing machine. But because what is happening in terms of the premiumization, and because there's a rule slowdown, that uptick is not happening. Small packs are selling more, big packs are not selling more, and the companies in a sense are struggling to take the premiumization up. So the trend is where there is aspiration, when there is a story, where there is whole lifestyle experience, that category continues to do well. The basic necessities, which is sabun, tel, shampoo, all those categories are not doing well.
Okay, so that's the take coming in from Mr. Nikunj Dalmia. But with this, viewers, let's move on and let's get our expert take on the FMCG names and any of the stock that our experts like at this point in time. With this, let me welcome Kunal Bothra on the technical side, and we'll also be joined by Ashish Maheshwari in a short while. And Kunal, what's your take on these FMCG names, though a weaker Q3 updates coming in, and we have seen stocks, some of these stocks like Godrej Consumer seem to be drifting lower. But any of the stock that still stands out, as well as what's your take specifically on Titan, because the stock did touch its all-time high level today, now trading flat. Is this a good opportunity to get in?
Good morning. So I'll start off with the FMCG pack, and my sense was over the last many days we had actually seen some institutional action coming back into the FMCG stocks. Good price action, volumes building up for these names. In fact, many of the stocks like Tata Consumers, Godrej Consumers, they had come back to their multi-week, multi-month highs for themselves. So the momentum was building up into these names. Today's sell-off and the price action indicates that maybe we could be into a temporary phase of a correction for these names. But I believe what matters now to see for these stocks is how far can the correction take the stock towards, whether it's in terms of the short-term support or if there's a major retracement and a stronger sell-off which happens into these stocks. That could probably be something to watch out for. Maybe over the next couple of days, once the volatility settles down, then I think we could probably be figuring that out for the FMCG pack. But I think as of now, it's Tata Consumers on the longer term charts, which still looks attractive. On Titan specifically, the stock has seen a very consistent build up. I remember, I think many phases when there was negative update in some terms of the results, stock had fallen down, but then it was followed by a V-shaped recovery for the stock, which means that at current levels, we could actually be looking at a consistent upside building up for Titan. 3,700 is where the stock is trading right now. 3620 seems to be a good short-term support, and on the upside, we could be looking at 3850, 3900 as an immediate target for the stock.
Alright, so that's the view coming in from Kunal when it comes to the FMCG pack and in particular Titan. We will connect with Ashish Maheshwari shortly, but before that, let's slip into a break on this edition of Buy Now Sell Now. When we come back, we'll get Ashish's take on the FMCG pack as well as start with taking all of your queries, so don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now. Markets have actually drifted much lower from those levels. Now 7-10% down to coming in from the day's highest point. When we talk about the Nifty, 150 points, odd points off the day's high. That is your Nifty index. Also, you have Sensex that is seeing sharp cuts. Nifty Bank, that's the one that was underperforming the benchmark indices. There also the cut is to the tunes of about 300 points from the day's highest point. But let's bring on board Ashish Maheshwari to get his take on the FMCG pack. A very good morning to you, Ashish, and Happy New Year as well. And thank you so much for joining us in the show. Let's talk about what's happening with the FMCG pack as a whole. Yes, you're seeing sharp cuts coming in on that sector, owing to actually what's happening when it comes to the quarterly performance or operational performance for most of them, most of the stocks. What's your take coming in for the consumption pack, for the FMCG pack as a whole? And do you think someone should place bets on certain companies there now?
Yes, in fact, if you see Nifty FMCG indices, there's almost from highs, indices is down by almost 1,200 points, and it's down by almost 900 points today itself, which tells the story what is the investors' outlook for FMCG companies. I think the major culprit are here two, three factors. One is the The major issue is that there's the demand is in range of 3 to 5% in most of the companies. So the sales growth which is there, which is not encouraging at all, because market is used to see at least in higher single digit or double digit growth from these companies. So if growth is moderating so much, and which is on account of rural demand is not picking up, as well as urban growth, urban demand is again very static. And the way new brands and particularly local brands are also tapping the market, I think there will be some pressure in revenue growth of these companies. Though commodity prices are moderated, but some price benefit also they have passed on to consumers. And international markets also are not showing a lot of traction as far as Africa or MENA countries are concerned. So, in my view, headwinds are not positive for these companies, and as valuations are almost at 52-week high in line with the market. So, some correction is going to be there. The stock which I like is still here are first Varun Beverages. In my view, they can show the maximum growth in FMCG sector. I'm expecting double-digit growth in Varun Beverages, as well as Nestle is again a good stock to look at in this sector. Again, I'm expecting 9 to 12% bracket in Nestle in terms of revenue growth. So Nestle, Varun Beverages, and on some more correction, Godrej Consumer Product, I like to add in my portfolio. Dabur, Emami, HUL, etc. are avoid.
All right, so Nestle as well as Varun Beverages are coming in as a top pick from Ashish, and along with that, he also shared his take on the FMCG names. But with this, viewers, let's kickstart taking all your stock-related queries in the Buy Now Sell Now show. And viewers, you can connect with us live on a WhatsApp number that will be flashing on the top of your screen, as well as you can also write to us on our social media pages, that is Twitter as well as Facebook handles. But with this, let's kickstart taking all your queries then. And the first query that I have is coming from Bishakha. And Kunal, he wants a take on GSPL. He's holding 30 shares from a price of 233 rupees. What to do in this particular stock? If that's a hold, then for how long should he continue holding this one?
Well, if you're looking to hold on, then I would probably suggest maybe a trailing stop loss of 315 to 300, depending on what's your time frame and what's your risk appetite. So I think that could be a trailing stop loss, 315 if you're a very short-term trader and 300 if you're a positional trader. But yeah, I think you can continue to hold on to the stock. It's been more of a consistent name over the last many weeks and many months. So I think trailing stop loss and holding on could be a better strategy for the stock.
All right, this one is coming in from a viewer whose message is yet to be loaded. This one is coming in from Ajay. And Ajay would want to know from you, Ashish, 2 to 3 stocks from the small cap or the mid cap categories like Bector Foods or Thomas Cook that he can actually look to invest in. Both of them are diverse sectors actually, and diverse business plans as well. But any stocks in the mid cap or the small cap space that you think look attractive right now for a long-term investment?
Investor want to know between these two stocks, Thomas Cook and Mrs. Vector, or
So
other stocks also?
he said that 2 to 3 stocks from small cap and mid cap category like Bector Foods and Thomas Cook. I'm unsure if he wants your take on both of these stocks.
Okay. So, Mrs. Vector Food, I don't like this stock very much. In my view, you have many other stocks which can give better return than this stock. So, Thomas Cook is again a good idea because the way tourism is picking up, Thomas Cook can do much better. And again, a turnaround story. Along with, if you want to add some mid-cap names, and Trident Limited is again a stock which you can look at. Stock is moving up, for last couple of days. But in my view, still stock is undervalued because whatever the segments they operate, they are all doing well. Almost 100 crore quarterly profit companies reporting, and these 2 quarters are going to be really good for Trident Limited. Along with that, you can look at GMR Airports also. There's again, here we saw some block deals happen today, and stock is being mobbed up by like who's who of fund industry, because now there's clear visibility that they are going to report profits going forward. Along with that, they are bidding aggressively for newer airports. So these couple of ideas you can add in your portfolio is still below 100, 700.
So those are the topics coming in from Ashish as of now. But Kunal, the next query that I have is coming from Venkat Rao from Vishakhapatnam, and he wants a take on RPSG Ventures. Do you like that stock for a fresh purchase, as well as if yes, then any price that he could enter in this particular name?
Well, we have not been tracking the stock as such, but just looking at the charts preliminary, it's a stock which is forming a sideways kind of a pattern over the last 2 months. I think from 800 as a top towards maybe 700 as a base. The stock seems to be trading to this 100-point band. So from a short term, you may look to buy the stock in between of this, in midpoint of the range, or maybe if it dips down closer to that 700 mark, that's where the risk reward could be attractive. In case if it breaks out of this 800 resistance, we could be looking at a potential 100 to 150 point upside over the near term. So I would suggest a buy. But then the only catch is that the volume so far is a bit lackluster for the stock price. So I think your position size has to be a bit more important over here. But I think 700 to 735 where the stock is trading right now is a good base or a support for the stock.
All right, this one is coming for you, Ashish, and this one is from Deepak, writing to us from San Diego. And he's been writing to us after a while. He has a question to you. He has 300 shares of tin plate, which he's bought at the price of around 285 rupees per share 2 years ago. And with the news that's coming in with the merger of Tata with the Tata Steel, he wants to know whether he should book profits or continue to hold on to tin plate, because he already has 500 shares of Tata Steel in his portfolio with a buy price of around 125 rupees per share. So what sort of a guidance would you give him? Stay put with tin plate, or should he book profits?
My advice will be to book profit. I think once this merger thing takes place, again, why to have so much exposure in Tata Steel in particular metal space? So instead of this, you can continue to hold your Tata Steel and Tinplate. You have already made enough money in this stock, and I'll advise to exit this. And if you want to look at another stock, I'll recommend to buy Maharashtra Seamless. This is again a stock which is into the pipe industry and has given very good returns over last 6 months. And this has good potential. In fact, I'm expecting very good numbers in Maharashtra Seamless in this quarter also. So for 1200 price target, you can hold this stock for 1 year time frame. So exit in plate is my opinion.
The next query that I have, Kunal, is coming in on Bandhan Bank, and for the past 2 days, the stock is reeling under pressure. Rakesh from Delhi has bought 200 shares at a price of 250 rupees. Wants to know, should he go ahead and add more with the current dip in the stock? What will be your advice?
See, difficult to know why the stock is correcting over the last 2 days, but the correction is steep because from 260, I think 262, that was the high for Bandhan Bank. It has fallen down to now 237 approximately, which means a sharp cut of almost 10% for the stock in a matter of 2 trading sessions. Of course, post that, we would probably expect the stock to get into a bounce.
This particular name, and what's the outlook going ahead?
I'm not that bullish as far as Star Health is concerned. I've given this view earlier also on your platform, because this is an industry where too much competition is coming up from players like Aditya Birla Health or Tata, AIA, etc. So this is the reason the stock has not performed. Only from 480, the stock is just 515 last 1 year. So my suggestion will be to exit from this stock. Instead of this, look at ICICI Lombard or LIC in your portfolio if you want to remain in insurance sector.
The next one is coming from Sudhir. He's writing to us from Hyderabad. He's purchased 1,000 shares of LN Electronics at a price of 235 rupees per share. He wants to know whether he should stay put with this one or look to exit. Ashish, what's your take? Because since it's fairly recently listed, or rather it's been just a year that it's been listed on the bourses. Let me take your take on this one. Ashish, LN Electronics, do you track this one fundamentally and make sense for Sudhir to stay put with this one?
Yes, I think fundamentally company is good, and like if you're having long-term view because you are holding for 1 year time frame, I'll advise to remain invested. This company can give you good returns, maybe in 1 to 2 year time frame. My target is 200 rupees in this stock in next 1 year.
200 target price coming in for LN Electronics. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back. Welcome back to Buy Now Sell Now, show where we get you answers for all your stock-related queries. And continuing the same, Kunal, coming to you for the next query. This one is on RVNL, and Sunny wants to know, have a short-term view on this one, where he has bought 300 shares at a price of 185 rupees. What will be your view?
So I think 170 could be a stop loss for this trade if you can have that deep stop loss on the stock, because I think that's the 50-day moving average for RVNL. And even in the last attempt, I think in the month of December mid, when the stock got into a corrective phase, it took support at the 50-day moving average from I think it was around 175 mark, and from there it moved back towards 190, 192 plus level. So I would believe that you could probably keep the similar stop loss in terms of the indicators, which is a 50 DMA, currently placed at 170.
All right, moving on. This one is coming in from Gayatri, and this one is for you, Kunal, because she has a portfolio which is currently in 20% profit and mostly comprising of large cap stocks. Now she wants to know whether does it make sense for her to sell her entire portfolio and start from scratch and keep adding during the existing dips. She's a long-term investor. She's only started investing in the market since the year February 2022. You think it's a good advice or a sound advice or sound strategy to go ahead and exit completely, sell off the portfolio, book all the profits and then restart?
Frankly, I would suggest not to tweak with this portfolio. Now, there are 2 points which you have to remember. One is, of course, it depends on what kind of large cap stocks you've invested into. Because if you're talking of it from Feb 2020 or period, which means over the last 2 years approximately, there have been many large cap stocks which have performed, many of them which have underperformed. So it really depends on the kind of stocks which you have in terms of your portfolio. I also believe that the market is now getting to a phase where the mid cap end could probably get into a bit of a struggle, but the large caps may tend to outperform. And we've seen historically that whenever the market gets into any choppy phase, volatility or any downward trend, even if it's short term, large caps would tend to outperform more than the mid caps and small caps. So I think it all depends on the kind of stocks which you have as part of your portfolios. If you have the underperformers already, underperformers in the sense of HDFC Bank, Reliance, and you're still making money into these stocks, you should stay put. But if you have stocks which are extremely overbought and which have managed to rally up significantly higher, for example, the likes of Bajaj Auto, etc., then you may probably consider booking profits.
All right, the next query that I have, Ashish, is on Electra Green Tech. Dasaradi from Vijayawada is holding 60 shares and his buying price is 1,237 rupees. And what a stellar run this stock has seen, and also is been buzzing in the recent times as well. Good time to book out profits, or should he continue to hold on?
No, I think this is still a good buy. Forget about selling this stock, because we must understand there are too many companies which are into EV buses. And Electra is a company which is very focused on this EV buses, and the kind of orders which are going to come in EV segment, not from one or two states, but pan India, it will be even difficult to meet the demand. So we have seen the stellar run in Electra, JBM Auto, etc. So this run will continue, and in my view, you will see 2,000 rupees mark in this stock very soon. So remain invested. On any correction, even buy more.
Badri has a query to you, Kunal. He's holding about 100 shares of Home Distilleries at a price of around 285 rupees per share. He wants to know what's the future outlook. Should he accumulate or wait for further corrections?
Is that the only query, or is there anything else?
The other thing he said that he's definitely mentioned that, good morning, Cheryl. Hope the market takes cue from you and stays green. This is all because of you, Kunal and Shrishti, that everyone thinks that whatever I wear, the markets actually turn the direction that way. So today I worn green, the markets are in the red, guys, isn't it?
Absolutely, yes, Cheryl. Let's hope that the market turns green. But then on the query for SDBL, that's the query for, that's the NSE code for Som Distilleries. It's interesting because I was actually doing a price comparison for these liquor stocks, and there was a point where United Spirits was underperforming, UBL, Radico Khaitan had done exceptionally well. Som Distilleries had been an underperformer in that regards. But then the stock has picked up pace from those levels of, I think, 220, 225, which was the breakout point for the stock. Somehow in the last 1 month, the stock has gone through a correction, and I sense that it's based on the news flow surrounding the stock price. I would believe that the effect of this could last for at least another couple of months, if not more. You may probably expect the stock to get into a correction. There could be a chance that the stock may even break its 200-day moving average, which currently is at 270 levels approximately. So on the back of this, I would suggest that you can hold on to the stock in case if it dips down below its 200 DMA and falls by a margin of another 5%. That's a point where you can look to even average further.
All right, so that's the take coming in on Som Distilleries. But Cheryl, let's wait when the markets end, and then we will try to get on the conclusion of this theory, whether this holds true or not.
Absolutely, hopefully, Shrishti.
Let's see, and let's hope that the markets turn green. But with this, let's move forward. And Kunal, the next query that I have is coming from Kunal itself. His name is Kunal, and very interesting to note that he's just 21 years old. He's a student and has already started investing. He has two stocks. First of all, he has NMDC from a price of 195 rupees, and he also bought LIC post the IPO. His buying price is around 840 odd rupees. What's your take on both of these names? Should he continue to hold these names or move out?
Well, yeah, I would suggest to hold on to both of these stocks. In fact, your looks like that your stock picking is more towards the performing stocks rather. The two names which you mentioned, NMDC and I think even LIC, both of them have very attractive charts for themselves. LIC is recovered from that 550 odd base which it had formed a few months back towards now 800 plus level. So it's now settling into a higher range, which is again a good sign for LIC. NMDC has moved up higher. I was actually looking at many of the commodity stocks. NMDC was something which I remember recommending at 140-50 levels. So I would still have a bullish stance on NMDC at current levels, and even for LIC. I think both of these are good picks. Hold on to it from at least the next 6 to 9 months, if not more.
All right, this next one is coming from V. Murli from Bangalore, and this one is for you, Ashish. He wants to know whether he can buy PG Electro Plus at current price, market price, where it's corrected from its peak. He wants to hold this counter for the next 6 months. I will take this one to Kunal. But however, he has Triveni Turbine, 500 shares at a price of 417 rupees per share. This is what he's purchased last week. But he wants to know how does this one stand out when it talk about the fundamentals. Ashish, that's Triveni Turbine for you. And Kunal, for PG Electro Plus, I'll come to you whether he can buy or no. Ashish, first you.
Yep. Triveni Turbine, I think you can remain invested. We have seen good performance from this stock of late, and consistently companies making 60-65 crore kind of profit every quarter also. But slow and steady, but we'll give you a target of 450 maybe in next 3 months. So remain invested.
All right, and Kunal, what's your take on PG Electro Plus? Do you think that now the viewer can look to buy this one for a period of 6 months or so?
Well, I would suggest to wait out for at least another 200-point drop into the stock, because my expectation is that the stock would get into such kind of a correction. For the first time in last so many months, it's managed to confirm a breakdown below its 50-day moving average. If it sustains this level of 2100, 2140 and maybe falls by another 40-50 points, it could open a fresh leg on the downside, which could take the stock towards its 200 DMA. That is closer to 1800 levels for the stock. So would suggest a buy on dips approach. Maybe at least another 200 points lower is where you can start off.
Right, moving on, and Ashish, one such theme that starts buzzing with the election period coming near to that, and that's the space is fertilizer stocks. And Devashish wants to have your take on any of the top recommendations from this particular space for the next 18 to 24 months. He already has some names in mind that are GSFC, GNFC, Chambal Fertilizers, Deepak Fertilizers, and Coromandel International. So any of the stock that you like at this point in time?
Yes, investor is right that ahead of election we have always seen some amount of rally coming in this particular sector. So I suggest the first pick can be Chambal Fertilizers. Again, their board meeting is there for buyback today. So this stock will continue to maintain momentum. Another stock which I like is Rama Phosphate and Paradeep Phosphate. I think this phosphate stock will continue to do well and give much better return than your NFL or RCF, etc. So you can pick any of these stocks in the segment which I mentioned.
All right. This one is coming in from this one is coming from Vivek and Kunal. Tata Consumer at a price of 450 rupees per share, Nestle at a price of 12,000 rupees per share. Does it make sense to liquidate and enter into another sector and not just FMCG is what he's saying. He's making profits in both of these stocks because he's been holding on to these since the year 2018.
So I don't see any reason why you should be looking to work out. In fact, Tata Consumers has just managed to come out of a major consolidation. FMCG as a pack has consistently delivered, and we've seen historically that whenever trends begin or pick up for FMCG names, these stocks they tend to get into a major uptrend for months, quarters, and even years to come by in many cases. So I would still believe that these FMCG stocks have made a comeback for themselves, breaking out of their multi-week, multi-month of consolidation. You should ideally hold on.
All right, the next query that I have, Ashish is coming from V. Ravichandran from Chennai, and he wants to have a take on Imami. What's the outlook for the next 3 years, and can he go ahead and buy this counter at this point?
See, as in the beginning of show, though I mentioned that I don't like Imami, Dabur, etc., because again, the stocks have really moved up. If you see from 350, the stock moved almost to 590 and getting consolidated at this level. So, in my view, slightly Imami is now overvalued. We need to wait till at least 500, 480 levels before making a fresh entry because the revenue growth is not going to come in December quarter. Maybe March quarter onwards, we will see some offshoot coming in Dabur and Emami and Godrej Consumer, where again growth will come. So wait for some time and wait for some more correction coming in this stock. Then surely you can accumulate for 3 years perspective.
From Catherine, who's writing to us from Mumbai, Snowman Logistics, Kunal, buy price was 60 rupees per share, about 1,000 shares of Snowman Logistics. She wants to know what sort of a short-term target should she keep in mind for this particular counter?
So just looking at the charts for Snowman, some time back, and I think the stock is confirming a double bottom breakout. Ideally, you should hold on to the stock because the breakout point is around 65, 67 for the stock on the monthly time frame. So I would suggest a hold on Snowman. If this trend continues for the stock and the way the price and the patterns have shaped up, I would be looking at least an 85 to 90 kind of a target for the stock.
All right, that's the day coming in on Snowman Logistics. But with this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll come right back to take more of your stock-related queries, so stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's continue taking all of your stock-related queries then. And this one is coming from Munir Rajulu. And also, viewers, just a quick reminder to all of you: please don't re-post your queries after you posted them once, because what's happening is we tend to lose the track of the queries that are given, and a lot of queries get missed out in that way. So Munir Rajulu has a query on precision metallics as well as oil country tubular for the long term. I'm unsure if you track both of these counters. Ashish, your take?
Actually, I don't also track both these stocks.
Next query then, and this one is coming in from Yuvraj from Chennai, and he wants to know if there's any drones stock that he can look to enter in, or in the defense pack, any stock that he can look to invest in right now. He wants your advice, Kunal.
Well, I would probably stick to the defense space, and I think in that regards, I would probably look at BEL as a stronger bet. I think that's a stock which still looks quite okay. It's a low beta stock, has done quite well for itself over the last many months. The only reason we're not picking up HAL, etc., is because these stocks seems to be coming back into a bit of an overbought territory. So I would probably just wait out for a phase of correction into these stocks. But as of now, if you ask me, I think BEL is something which looks attractive.
The next query, Ashish, is coming from Rita, and she's saying that she got one allotment each for two of the recently listed IPOs, that is Suraj Estates as well as Happy Forging. What's the outlook for the long term in both of these? And along with that, since she didn't receive the allotment for Electroforce as well as RBZ, so at this point in time, good levels to enter.
I think he looks to be a IPO-based investors, and if allotment is not there, just leave it and keep on applying the new IPOs. This much I can say. As far as Suraj Estate and Happy Fortune are concerned, in my view, both you can book profit because again, whatever the initial euphoria is there around these stocks, because they are not the ones like which I'll suggest to hold for very long term. And here in both these stocks, because the Happy Fortune was I think at 850 rupees, you are still making money. And don't miss opportunity to book gains. Is in a nutshell I like to convey.
All right, this one is coming in from Chandra, who is writing to us from Mysore and wants to know whether she can buy Surya Roshni for the medium term, Kunal.
Well, I would suggest to wait out till at least 700 levels because the stock has this tendency of going into a very swift uptrend over the very near term and then correcting by a margin of at least 15% odd in a span of subsequent the next 3 to 4 weeks. We've seen that pattern shaping up in the month of September as well as in the month of I think October mid for Surya Roshni. Currently, the stock has made a high of 838, come back towards 761. So if you look at the near-term retracement, the targets come closer to 700. So that's where the stock should ideally land up towards. Maybe 700 could be a better price to buy the stock as well as a better time in terms of the retracement and risk reward.
All right, the next query is specifically for you, Kunal, coming in from Gaurav from Indore, and he has bought 3,000 shares of Bank of Maharashtra from a price of 48 rupees. He wants a 1-month outlook on this counter.
Well, not too much bullish on a 1 month time span, but if you can extend this time horizon to the next maybe say 12 months, 18 months or so, then I'm extremely bullish on the space. So what's actually happening is on the quarterly charts, there is a bullish crossover which has happened for Bank of Maharashtra. The last time a bearish crossover happened for the stock in the same quarterly time frame chart was in 2015, and the stock had corrected from a level of 50 rupees to I think around 10-12 rupees for itself. So that crossover has managed to turn around, which should be ideally very positive for the stock on a longer term basis. But I'm unsure that how the stock would probably perform in the next 1 month.
All right, this one is coming in from Balan, and Balan has metal stocks in his portfolio. That's JSW Steel, SAIL, Nalco and Tata Steel, and luckily he's making profits in all of these counters. Kunal, he wants to know whether he should sell these and instead now shift to ICICI, I believe it's bank, and Godrej Properties.
Well, it could be a good proposition to buy or to shift from the metal stocks towards these two names. But I would advise to maybe wait out for Godrej Properties to get into a correction and then look to buy these stocks, because the real estate stocks have run up exceptionally high. I think the index has moved to almost 858, 70 plus mark. And looking at the way the indicators are for many of the real estate stocks, it seems like that they are getting into that zone of extreme froth for themselves. So you may probably expect a cool off as well as a correction into these names over the near term. Buy on dips would be advice for Godrej Properties, but for ICICI Bank, you can go ahead.
Okay, the next query that I have, Ashish, is coming from Ghosh Tada, and he says that he has sold all of his Adani group of shares stocks except Adani Wilmar because this counter is at a loss for him. Can he go ahead and buy any of the Adani shares again? And he also wants an advice on Gandhar Oil. What will be your advice on this one? Can he buy this name as well?
The only stock which I don't like in Adani pack is Adani Wilmar. This is quite underperformer in this pack, and in my view, will continue to remain underperformer only because we don't know the status of Adani Group selling this stake to Wilmar, etc. So till the time uncertainty is there, the stock will not able to perform much. So my suggestion will be instead of Adani Wilmar, migrate to Adani Port, which is the best stock in this entire pack. As far as Gandhar Port is concerned, in my view, whatever initial euphoria was there related to IPO, this is getting subsided now. And if you are got allotment stock, then you can still book. And I'll not advise any fresh entry in Gandhar Oil because, in my view, still it's overvalued. And whatever price we are witnessing is on account of very high oversubscription only. So 220 may be a good price to look at.
With that, let's kickstart with taking your queries in the rapid fire. Then, Kunal, coming first to you. Deepak from Mumbai wants to know, is it the right time to enter Electra Green Tech? And also, till what time we should hold? This one is on record high levels. What should he do?
I think we had given a buy just about last week or so when the stock was at 1300, 1350 mark, not to buy at current levels.
All right, Ashish, what's your view coming in on Escorts? The stock is in the downtrend, but good time to add this for the next 3 years. This query is from Krish.
I think wait for around 2,700 rupees, then start accumulating. For 3 years, my target will be 4,000 rupees in this stock.
Mehtan Alloys, Seema wants to know whether she should look to buy this one. Ashish?
No, I don't think so. It's a good time to buy.
Okay, Kunal, Sachin wants to know, have a take on Rajesh Exports. He is holding these shares from a price of 513 rupees. What to do next?
Exit the stock.
Archana, who's a fan of Kunal, has written about Tata Motors, 200 shares purchased at levels of 630 rupees per share. She wants to hold it for 2 years. Does it make sense, Kunal?
Yeah, if you're a long-term investor, only then hold.
Okay, but Ashish, what's your take on Tata Elxsi? Good time to buy this particular stock at current market price? This query is from Ramamurthy.
I think 8,000 rupees can be a good price, not now.
All right, this one's from Nishil. He wants to know whether it makes sense to hold Ratan Power for the long term, Ashish.
Yes.
Okay, Kunal, what's your advice coming in on Tata Steel? Yuvraj wants to know that will this be a good idea to switch from Tata Steels to Shyam Metallics or NMDC? He didn't share his buy price at this point.
Could be a good switch, but may not be the best of the times.
All right, Swati wants to know Ireda, Inox Wind and Sterling Winston. Out of these three, which one does it make sense to stay put with for the next 1 year, Ashish?
Irida.
Okay, Ashish, what's your take coming in on KPR Mills? Anupama is holding 100 shares from a price of 883 rupees. Is that a hold or exit?
Exit in my view, and you can shift to maybe Arvind, which can give you better return.
All right, with that, we come to the end of the rapid fire as well as queries. Thank you so much, Kunal, as well as Ashish, for joining us on the show, talking about the FMCG sector in particular, as well as resolving all of our viewer queries. And viewers, with that, it's a wrap on this edition of Buy Now, Sell Now. We'll be back tomorrow, so stay tuned. Coming up next is Markets at Noon.